Hi, good afternoon everyone. My name is Ciaran O'Malley. I'm Head of Commercial Strategy at Trustly, a European payments fintech. I'd like to talk to you today about an opportunity for Europe with payment initiation services, or PISPs as they're known. These services, they offer easy, convenient and secure online bank payments. However, they face some challenges. Electronic payments lack effective competition. And by effective competition, we mean competition that expedites innovation. In customer experiences, support digitalisation across all types of goods and services. The revised EU Payment Services Directive, or PSD2, has been an important building block towards this goal, but the devil really lies in the detail here. The devil lies in the detail, in particular with the regulatory technical standards, which are not yet complete. Therefore, the objectives and the potential benefits of PSD2 have not been fully delivered upon. And notably, this is not allowing this effective competition to arise. Now, before I go on, I should probably introduce Trustly. Trustly is one of the largest payment initiation service providers in Europe. The company was founded in 2008 in Sweden, and we're regulated by the Swedish FSA, have been since 2009. We like to consider ourselves one of the early innovators in European online bank payments. Now, today we service about 4,500 merchants. We process over 100 million transactions, and we've been growing at a rate of above 50% per year. We have offices across 6 European countries, headquartered in Stockholm, and we have 350 employees. Now, an important question is, why should you care about payment initiation service providers and innovation in that market? So, initiating account-to-account payments could deliver the best possible online debit payment experience. This would give merchants a genuine alternative to cards to support their customer propositions. Many customers are used to paying online electronically via e-wallets or cards, but they're much less familiar with credit transfers and bank payments. We and other PISPs are starting to change that. Now, I'm conscious that lots of people aren't aware of what a PISP journey is like. So today, customers typically select their bank within our iframe. They enter a personal identification number, that's something they know, and they perform a biometric, i.e. fingerprint, strong customer authentication. The customer is then presented with a balance that they have, so they ensure they have the funds to make the payment, and then they authenticate again via fingerprint frequently. This delivers a convenient, easy to use and secure way to pay online, but also future offline store. Generally, the experience has 3 benefits for consumers. It's convenient at the point of payment. There's no 16-digit card number. We leverage biometrics. No registration. You don't need to download an app. There's no new account to set up. You have an account. It's your bank account you use every day. And security. 2-factor authentication is embedded into the PIS payment flow, and it mitigates the risk of fraud such as stolen card details. Now, on the merchant side, there's a huge cross-border opportunity, enabling customers with a European bank account to seamlessly purchase from other European merchants moves us closer to a single market. Faster cash flow. This is a key issue for SMEs. With PIS payments, we can provide access to funds faster than with cards, and particularly when instant payments are leveraged with PIS. And finally, more appropriate costs. Payment initiation services allow for greater flexibility in how we charge merchants, and this means we can come up with more appropriate fee structures than cards do today. So it's clear that a better payment experience will enable merchants to embed payments throughout their customer propositions and ultimately drive better products and experiences. Now, why am I here? Well, I'm here for a simple reason, that the job isn't finished with this. There are challenges, and I'd like to outline a couple of them today. On the PSD2 implementation side, as mentioned at the beginning, it's been great in principle in enabling and regulating these new services. But as I said, the devil really lies in the detail of how it's implemented, and in particular on a more technical level, where we find a couple of stumbling blocks today. Banks can enable PIS payments either directly through the consumer's website, so the website you deal with, otherwise known as the payment user interface, or through a dedicated interface, or API. Now, while most banks have decided to go down the API route, it's a very complex task, and almost none of them actually work well or fully functioning today. So this clearly needs further improvement. In reality, when someone such as myself goes and pitches this product to merchants on a daily basis, the PIS proposition has some issues with the APIs that means that key functionalities that we need to compete are not actually available to us. Now, just two examples of how we could change the legislation, how we could be helped. One being on the IBAN for refunds, and another on authentication methods. So as far as refunds are core to the modern e-commerce experience. The current experience with card is actually ripe for innovation. Frequently it takes 4 or more days for a consumer to get their funds back. Now, unfortunately, many APIs in the PSD2 domain do not provide the account holder name nor the IBAN of the payer. This is essential for refunds, for fraud prevention, and for convenience. The second area I'd like to talk about is authentication and redirection, which was mentioned, or authentication was mentioned before. Authentication is critical to the payments journey. It allows us to deliver security and better customer experiences in the best case. But let's be clear, customers want seamless authentication experiences. Many APIs redirect consumers to the bank, for payment authentication to the bank's website. Now, this requires the user to often re-authenticate, or at least authenticate up to 3 times. Now, furthermore, those experiences, the 3 authentication experience, often only works in a browser environment. Now, we do not believe that this can be a way forward if we want to create easy, convenient, and secure payment experiences. Now, I'll jump over our comments on open banking, and if anyone wants to talk about that later, I'm more than happy to, but for the sake of time, I'll conclude that the financial services sector, is undergoing a very disruptive transformation at the moment. But once these open challenges are addressed, it's one that we trustedly believe will ultimately benefit banks, merchants, and consumers. When leveraged strategically, the regulatory landscape allows us to build innovative payment solutions that are faster, safer, and less expensive than traditional solutions. Again, I look forward to talking to you about this later. Thank you.
Thank you so much.